Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for May 4th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. After our previous session here, we have the FOMC key level come out right at the 1 o'clock open here, 23.8075. That's our new FOMC key level. At times, that becomes a very, very important level where the market will trade above and below it. It'll rally away from it. It may see rejection and come back to it. Those types of things. So we're going to keep an eye on that 23.8075. We continue to hold in a very narrow range. Yesterday we finally tested prices just below 77 and 76.5, and that was an area for bulls to defend, as we've noted, and that continues to be the case. This 76.5 is a major pivot until price breaks back below this level. Right now, this market's still building energy for potential expansion, and that could occur to the upside. And again, if price can push through the 2400s and find acceptance, 24.24 and 24.59.75 are the next upside targets. Any failure to see an acceptance above 24.95s here could open the door to running the stops below 76.5, and that would open up a move to 53, 48, and perhaps all the way back toward those 23.20s. So right now we're still in here building some energy. As a matter of fact, if you look at our advanced ADR indicator here on a 5-day range basis, we've put in some of the smallest ranges that we've seen in years. Right now, on a 5-day range basis, we have formed a 15.25 point range over the last 5 days combined, and that's way below average. Average has been 38 points on a 5-day range basis, and even that's fairly low. So right now, we have a tightly coiled range, and we could be looking at significant expansion down the road. We got to watch the edges and see which way we go. So far, 23.9875 still 23.8875, 23.76.5 still the key levels here on both sides. The market basically fading back off those levels until we see expansion. If we look at the intraday time frame, you'll notice here that after the previous session here, we have our FOMC key level. Price traded above and below that key level. So it was developed here, back above it, back below it, and then now away from it. So overall, we're back above 23.8875. That's going to be a very important level here. If there's any failure to hold here, we could be looking at a move back to value and back to the 23.8075s, which is the FOMC key level. Above this zone starts to stretch it into 23.9475, and again, that's about the area where on a swing basis, acceptance or rejection will begin to occur. All right, let's see crude oil. Here's a look at crude. We bring up the daily time frame here. With crude, we noticed before that there was an attempt to find rejection. There was an attempt to hold 48.80s, but by Monday morning we knew that 48.80s were not likely to hold, and we may see a return back to 47.10. 47.10 was hit this morning. That's the low of the day so far. This was 47.10. This was 47.01, 47.08, 47.10. Big time area of support here. And again, if prices can't hold this lower level there, we may be looking at a push down toward 45.43, perhaps even lower into 42 to 43. So we have to continue to watch this 47 edge. It's the bottom of a key range, and that makes it extremely important. Even if we did get below it here, it could still be an opportunity to trap back towards CV puck and the top of the range. So this is an important decision point in the market here at 47.10, and that was the expectation earlier in the week. That failure to hold 48.80 opens that test up, and we got it. Now we have to see what happens down below. 45.43 is the midpoint of a significantly larger key range. That could be the next focus point down if 47.10s can't hold. So we'll keep an eye on this right now, but a steady downtrending market so far. On an intraday basis, here we go. The intraday basis, you can see how price has been trending lower, VWAP trending lower, all pullbacks to or above VWAP so far being offered. So values offer right now. It's going to take price to get back above 47.40 in order to kind of push this thing back toward 47.65, which is the FOMC key level. Overall, 47.10, a big time key level here. We could begin to see some sort of rejection signature develop at or below this zone. So continue to watch it closely. Here's GC. Let's take a look at the higher time frame here. In the higher time frame GC, we also noted, very similar to crude earlier in the week, that while bulls had been defending our 63s, which was support all week last week, they didn't get paid. And when that happens, the tendency is for the stops to come out. And that's why we mentioned Monday morning again. It may be time to become a seller and run those downside stops back toward 1250 and 1240. And we reached 1240 yesterday. Today, we're making it resistance, it appears. And we've gotten down as low as the 1232. So that's quite a move that we've seen so far. Now, it's not time to jump in and begin buying at the moment, but there is that lower trend line that we've been talking about, and you have the upper line here. So you have a very orderly channel that's developed here. And down in this zone is about the spot where bears could become trapped below the previous low here. That's the previous month's low. Getting down in that area, failing to get any lower, could begin to squeeze this thing back toward 1300. So we're in the zone here where bulls want to begin to set traps. We'll see how this thing continues to play out. But below 1240 still has 1221, and we'll see how this thing develops down here. But this is the zone where we could begin to see a trap develop for the fuel that will push this thing higher. On an intraday basis right now, we're just holding at lows after the drop off. The previous session's close is here, and so far offered. Here's the previous low. We're sitting just below that area. So right now, a little bit of a range here. Any test at these edges could be short-term fading opportunities, but we're building energy here that could lead to a squeeze back up. And any failure to get back above or maintain acceptance above 1240 has 1221 below. Lastly, let's take a look at ZB. Here's a look at ZB, bringing up the higher time frame right now. If you look at ZB in the higher time frame again, what I've mentioned before is that while we were very, very bullish here and there was a potential to see much more strength, any failure to hold here could return this thing back to value, 149.24. And so far, price has formed a very, very tight range here below the 153.21s. I mentioned that this narrow range could open up expansion that leads price back across the range here. Any failure to hold above that resistance was quite bearish. So what I mentioned in our trading room is that an attempt to push through 153.21s, a failure there could be a selling opportunity back across the range into 149.24 and perhaps 147s. So we could be looking at much more weakness here. But again, a neutral range here. We have to watch for the expansion, but energy is clearly building, so watch the edges very closely. On an intraday basis, we'll bring up the intraday here. You can see yesterday, FOMC key level comes in at 153.02. Immediately, price went offered away from that level, and that's important. And now that becomes a very important reference point here, because should price find support, say short term down at 150.120, any rejection here would bring price right back to the 153.02s. So keep looking for a short-term continuation to the downside. Once you find rejection, it may be an opportunity to bring it back toward 153s. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and may the 4th be with you.